and it can diversify. In fact, they put a lot of it into NVIDIA stock that they bought at the right time and has shot up way up. They're investing back into businesses in the future when the deals make sense. But I found that the strategy is also going to be flexible for the founders, right? Because it's one thing just to defer the capital gains tax, but if you can't have the freedom and impact that you want to have with the wealth or create more wealth, then what is it to the entrepreneur who wants to start another business, right? Start another real estate or invest into real estate or diversify? It's got to be flexible. So talk about the importance of just having flexible capital, even if they want to go into as a VC or if they want to go into a deal with a partner and someone else. But I mean, I feel like capital is like the thing that people are starving for right now. But if there's not a flexible way to move it with tax deferred, it's tough to get a lot of these deals done. So, what's the importance of flexibility for the entrepreneur these days?
Yeah, no, it's interesting. Those are some interesting ways to sort of defer the tax with the trust that you just mentioned. But I've also seen a lot of entrepreneurs maybe start a nonprofit shell, put something into a 501(c). Maybe there's work that they actually care about, that they're actually able to sort of defer some taxes that way. But at the end of the day, I think you just need to figure out what works best for you and what your wants are. If you're not really interested in running a foundation or pursuing some nonprofit, obviously that's not going to be a fit for you. If you want to start doing investing, likewise, doing something where a trust that pays out over time, that's great. You might be able to defer some of those taxes, which is incredibly helpful in the situations where you have these big payouts. But certainly keeping some capital aside where who knows what you might want to do after you sell a business. Very, very common that we have, and a lot of the investors on our board were former entrepreneurs that just did really well. And they had a big exit and they had a ton of capital, and they started out just doing some investments with people they trusted because they had a really good network. And then sort of after that sort of escalated. More people said, "Hey, I want to work with you." And before you know it, they're running sort of their own little fund. We've seen that a bunch of times. So yeah, I think it's just being honest with yourself. What does my life want to look like, sort of post exit, and what are the things that I really want to do with my money? Sometimes our ideas change about those things, so having sort of that extra capital to be flexible is really important.